fits the bill. So yes. So yeah, tell us when we're going live here.
And we're live.
There it is.
What's going on, guys? How you guys doing Twitch? How you guys doing YouTube, Facebook? I don't think Instagram's on here, but what's up, guys? And we're back on here with Wyatt. We're back on here with Jeremy. This is Random Rabbit, and we're finding and exploring more rabbit holes.
Hello, welcome.
What's up, guys?
All right, so wait, are we on?
Yeah, we're live.
Because it still says starting soon on the feed. Oh wait, I paused it. That's why. Yes, there we are. There I am. Okay, so hi
I
everybody.
thought you were waiting for some like trumpet sounds or something.
No, I was waiting for it to change screens, and I realized I paused it. So I was looking at a paused feed. So of course I wasn't see it change. You know, I'm really smart. I swear. Okay, so the first topic we're talking about today is COVID, trade, and inflation. Those are three separate things, all kind of tied together. And the big point today is talking about how the Delta variant from India, right? That mutation that was obliterating people, is coming to China and to Asian countries. So what's happening is you're seeing a lot of lockdowns. You're seeing a lot of heavier precautions. That's slowing down trade activity at the ports. You're seeing in Taiwan, right? You're seeing the semiconductor industry saying things like, "Oh, reduce production 15 to 40%." So there's clearly going to be a material effect to this, which is kind of compounding onto the supply chain at a time we're trying to get trade, everything back to normal. So, and we can still see that COVID in, however you feel about it, right? There's still a material effect of it somewhere out there in the economy and the market. Even if you think that it's irrational, well, they're still doing lockdowns, they're still doing extra testing. So things are happening, and they may cause more supply chain interruptions, which makes things more expensive, right? Would pump up inflation. Everything from copper, corn, soybeans, and oil, right? All the stuff that we need, our commodities are all going up in price. Countries like Brazil, Russia, Turkey, China, they're all experiencing inflation. Russia says that their inflation is not transitory, meaning they recognize that inflation might be here to stay. So we're seeing a lot of tightening of monetary policies, countries kind of saying, like, we recognize inflation is coming. We're trying to stop stimulus. We're trying to make sure we don't let our economies run too hot, because if you run too hot too long, inflation turns into hyperinflation, and then prices of things are so high that you can't afford them, and that causes big problems. You can't afford to buy stuff. In the Eurozone as well, there's CPI, like our CPI, our Consumer Price Index, they were up 2%. So they're experiencing inflation as well. It's all over the world. It's global. It's not just here, and it's continuing. But then on the flip side, right, farms, agribusinesses, countries that do a lot of exporting, like Brazil, their economy's back to pre-pandemic levels. Why? Because all those high prices we're paying, well, it's going to countries like that who are exporting soybeans and coffee and stuff. So there's always two sides to the coin, right? While cost of commodities may be going up, for us, the amount of profit made by other countries who export them is going up. So, but there's definitely inflation, and we're going to talk more about this over the weekend, and we're going to talk more about this in a longer segment. But we're definitely seeing inflation around the world, and people are taking notice. All countries taking notice of this.
Interesting. And so, like you mentioned, like copper and other resources that have been going up. The reason I bring up copper is because I know that when it comes to green energy, the use of copper is definitely highly valued, and so
yeah.
They're trying to get more technology to obviously push towards a greener world, and this is obviously increasing the price of copper. Now, is copper undervalued right now? Is this a buying time for copper? As in, like,
no.
If we're looking at future markets?
No, copper's at a record high in terms of how much it costs. I would not be wanting to buy lots of copper at these prices, because we're seeing problems in the supply chain that make these things more expensive, because the demand is high, but the supply isn't necessarily there. So I definitely, corn and soybeans are at an 8-year high. Oil's at a 2-year high, which brings people, that make them afraid that if oil keeps going up, well, plastics are a result of using oil. So then things that are made of plastic, you're seeing, derivative products and derivative materials that will be affected by these commodities as well. So I definitely wouldn't buy copper. Like, if you're thinking about owning copper because it's a good investment, like, you're gonna buy raw copper, I don't think so. And then the prices, in theory, should go down.
How much is wood up right now? How much is the price of wood up at the moment?
think it's up. I think it's like 100% higher. I know in Jersey the cost of like sheets of plywood have almost doubled or tripled in value because I have some friend who was doing projects doing home improvement through COVID, and were paying for these things. They were literally seeing the price of cabinets and two by fours just going up and up and up to the point where they don't even know if they're going to continue the current project. They're going to wait because the doors cost 3 times as much as they should because lumber is going through the roof. Which is also why home builders aren't building as many homes. Their supply chains are very expensive, right? And if you're gonna cost that much to build the house, you have to charge a ridiculous amount for it, but that's not actual value. It's all inflated. So it makes building harder because you got to pay the workers, right? You have to add all these extra costs, and that might hurt the bottom line.
Yeah.
So lumber's up, yes, lumber is up very much as well.
Great. And since most houses are made of lumber, is this also
Or
naturally
some portion of
increasing the value of homes just based off what your home's made out of?
yeah, but
Definitely think about that.
I think that would definitely increase the cost of new homes to build, but existing homes, it's not like, okay, lumber costs more, so like if if you were selling your home for parts and good scrap wood, maybe.
Yeah.
But not existing homes. The price is pushing that up for, like we talked about yesterday, funds buying them, people bidding them up, more people wanting to leave the city and get suburban homes and out away from cities. So and a very constricted supply, no one wants to sell. So those are definitely pushing up existing homes. But I would say lumber would definitely be a big factor in new homes sales. But those prices would be up definitely because that would be a factor. Yeah.
Okay.
Cool.
Good points.
Yeah. So the next thing is the tech crackdown. We were talking about tech in the crosshairs yesterday with that bill kind of brought up by Democrats. Well, now we're seeing, and this may have always been the case, but bipartisan support. So, and that's kind of always been the theme. Republicans and Democrats both saying tech is too big for one reason or the other. So there's about 5 bills currently in the works, all listing things, that have to do with basically all centered around platforms as monopolies, breaking them up, making sure they're not too big, they don't have too much of a competitive advantage. For instance, like breaking up Amazon into 2 companies, where Amazon would be, its service of platform would be one company, and then its product lines, the things that it makes, or specific private label brands that it has, would be a separate business. They wouldn't be in the same business. They would be spread them out to increase competitiveness by making them 2 entities instead of one giant entity, right? So, those are some of the things
like the same thing that happened with Google.
Similar, yeah, so very, very similar. And I think the fear is that because you also have Amazon is buying MGM Studios, so they're moving into the movie business. They've got like exclusive rights to one of the nights of football. Jeff Bezos is about to blast off into space. I mean, remember, this guy owned a failing physical bookstore, and now he's flying in space. So you don't get that way without being very, very aggressive and taking advantage of your strength. But they're also moving into telehealth. Amazon Care, as it's called, it's got a couple of clients, and a couple of big businesses are starting to hop into that. So they're spreading into every industry. So I do understand in a way what they're getting at here, and tech is valued differently than retail. So the problem that they're going to have passing these things is, well, normally antitrust, anti-monopolies are really focused on the consumer. So if the competition, if a company has a monopoly, right, it can control prices, and if the price control hurts consumers, that's usually a clear case for, okay, you're too strong, you're too big, we have to break you up because consumers are being hurt. But in this case, you're not necessarily hurting consumers, but it really depends on how you define hurting consumers. Maybe the prices are reasonable and people are happy, but what about the ability to move your data and own the tech that you buy, right? What about the ability to move between products and share services as opposed to being stuck with one set of products or one group of products? Right, using one service primarily as your go-to for everything. Does that make it anti-competitive for other companies that want to break into that space? As well as the questions of people like Amazon who own the physical infrastructure of the internet. When they took Parler offline, and however you feel about that, you still have to recognize that Amazon made that decision. They took an entire platform out of existence because they didn't like it, right? And since they have so much infrastructure in the internet, both software and hardware, it gives these companies power over information, power over the existence of things on the internet that they don't necessarily need to have votes or laws for. They can say, we own it, we allow things to exist, so we can take things away. So I definitely understand. Plus the censorship, Facebook censorship, that's a whole thing coming down, and whether or not they're allowed to, they have a whole panel of people that decides whether things you do should be banned. I have friends who've been banned multiple times from Facebook, 30-day bans, 30-day bans. So they're acting like their own kind of judgment system, like a thought police. which is really not what they were made for. So people question that as well. Like, are they getting too strong? Because that's what we use to get all our information and to communicate. So are they inserting themselves much more heavily into that world, but not as just like an innocent bystander in a service, but as a regulator, right? Having the power to govern. So,
Yeah, I'm really happy that the government was saying, Facebook, you're not allowed to put a cryptocurrency or a currency on your platform, because then that would just give them way too much power.
Right, because the thing about tech, they expand and they say, oh, this is all part of our wheelhouse, because they don't sell products right the same way. So you're not buying up businesses and taking over, but they can still gain competitive that make it hard to compete with them in general. Such as, we'll sell cryptocurrency too. We'll become a broker dealer. You know what I mean? We'll just literally be your one-stop shop for everything.
If they're able to ban people, and they could ban people off their site for just saying something incorrectly, then that would mean they're banned from their marketplace, which is just not a free marketplace.
No, that's such a good point. You do not want your social media handling your money, and then them deciding when you have access to it or not, restricting access or not. Oh man, that just sounds like a rabbit hole in itself.
Yeah, technology is a double-edged is a kind of like a double-edged sword. On one hand, it has brought us some of the greatest advancements of all time, but on the other hand, it seemingly removes freedom. Right? It constricts us because we create a dependency on it, and then it's basically put all your eggs in one basket. Then that basket's controlled by a company. They're, listen, you do a lot of stuff here, but if we don't like you, we can take it away. You bought that laptop or that phone, but it's not really yours. The technology, the IP, that's ours. So you can't mess with that. Yeah, but I paid $1,000 for it. Yeah, but it's ours. You know what I mean? This is definitely
a fine line.
Yeah, and there's going to be questions about if the government can do this. And they're going to have to pass the House and Senate, and they're going to have to vote on it. So we got a ways to go for all this. Plus, I imagine the tech companies aren't just going to say, yeah, this is great, we'll accept your ruling. I bet they'll fight it. They have the money, they have the capital. So, I don't think it's going to be an adverse material effect right now, but this is something that, especially if you have big exposure to tech or you love tech and invest in tech, it's something you're going to want to watch. You can in the FANG stocks, and they come after FANG stocks. That might hurt those businesses or might cause you to have to make changes to your portfolio to accommodate. So.
Oh, good to know. It definitely sounds like a topic that we're going to be coming back to, especially the more it merges and government tries to take a hold of tech companies, which right now tech companies are power in it. And I think the government is utilizing them in such a way that allows tech companies to kind of bend the rules.
Yeah, I mean, I agree, because I think that when you normally look at companies and how monopolies work, you're generally talking about companies who own physical assets, you're talking about companies that have business storefronts. Technology is not the same way, and it doesn't grow and expand the same way. It's not exactly a linear comparison. So, there may need to be different interpretations and more flexibility with how we view the powers of government. But at the same time, people are concerned that, if the government can make decisions about what's too competitive without it having to hurt consumers, you change the definitions of what monopolies are, then it gives more precedent for the government to be able to say, we can be big government, we can have more power. And some people don't like big government, right? People don't want the government to have more power, more flexibility in what they can and can't do. So
guys, where does the majority of the money that Amazon brings in, where does it come from? Their data.
Oh yeah. They bring in
from
most
their
of these
data.
companies. If you use a service and it's free or it's cheap, you're the service.
Oh yeah, and I've heard of a company wanting to do business with Amazon, and Amazon said, well, we want to have your device always listening in and getting data from your customers and then giving it to us. And they said, no, we don't want to do that. Amazon said, okay, we won't do business with you then.
Right. There's a book called The Walmart Effect that talks about, because Walmart did this. They had these facilities where people would come to sell their products. They put them in chairs that were bolted to the ground and rooms that had bad lighting and they were uncomfortable. And what they would do is they would do this to psychologically make them uncomfortable, so they would be more likely to make a deal more quickly. And Walmart would say, listen, we're going to basically buy your product at cost or just above cost. They're like, that's the margins are too small for me. I can't keep producing that. And they're like, that's too bad. If you want exposure to this big market where there's the majority of people shopping and you want that exposure, you're going to pay for it. Some people went out of business. Some people did it and went out of business because they just couldn't be. And Walmart was like, we're going to squeeze you because good luck doing it on your own. We're the big guys. And I do understand there might be a fear of that with Amazon as well, because Amazon just overtook either is about to or did overtake Walmart as the biggest retailer in America. So
And that doesn't even get into the point of if someone comes with an idea and they just say to themselves, hey, can R&D remake this?
Right. They that's the thing about tech too. They're like, okay, we like it, but we have all this time to analyze your products, and we can find a way around your patents so that we're not technically legally liable, and then we can make an alternative version that's not yours, but just as good, and then we don't need you anymore. And then they make an IP on that, and then you're like, well, shit, what do I do now? That's the big thing about intellectual property as well.
That's why you need to make everyone sign an NDA before you show them any of your stuff to these big companies. Non-disclosure agreements, people.
That's right.
Yep. All right, I think that's
protect your IP.
A good place to segue to topic number 3.
So the post-COVID relief effects. So during COVID, the pandemic in America, in most countries there were stimulus and there were relief programs that helped everyday Americans do things like not worry about paying their rent, not worry about paying their student loans, stuff like that. Right now we got about 10 million Americans, which makes about 14% of the U.S. renter market, saying they're still behind on rent. And the CDC moratorium that says, hey, you can't evict people, that's going to come to an end in July with no real signals that's going to be continued. And surveys show that out of those 10 million people, 40% of them say that they may have to leave their homes because they don't think they'll be able to make those payments. So we could see a bunch of evictions here because we're seeing the revenue that's in arrears, right, for these companies, the money that they're owed but not paid for maintaining all these people in the buildings is about $70 billion US. So we're probably going to see evictions because we're going to see the renters say we need to get more money coming in, right, because their bills didn't stop, right? It's a tough line to walk because you want to evict people, but also the people that own these buildings, that own these properties, they're still paying their taxes, they're still paying their bills, they're still taking big hits, and the $45 billion in rental aid from the government, from Congress, is still being doled out. It's still being sorted through. So these people are like, we are just basically doing all this for free, and we're the ones losing out, right? But we still have to maintain our buildings, and we still have to maintain our properties, and we still have to do all those things. We're just not getting paid for it. So it's a really tough issue, and evictions this might lead to many evictions, which I don't know what it's going to look like, but I imagine there will be a material impact on the economy, or at least the local economies in the areas in which evictions occur. So we have to definitely,
with evictions being part of the housing market, do you see these evictions happening before or after the housing market bubble pops?
Well,
does this all have
specifically? Specifically, these are all renters, so they're not really owners of the house per se. It's mostly people who are renting space, so apartment complexes, things like that. Probably also some single-family homes, condos, things like that as well. But the moratorium ends in July, so I imagine definitely you would see evictions happening before the bubble pops. Because I think that's just getting started. Funds buying houses, this demand. I think we're going to see this for, the next 2 or 3. I'm telling you, the next year or two, I think you should expect to see more prices rise and inflation to take hold. I think we'll expect to see us still revving the engines. I don't think we're ready for that downturn yet. But evictions, the moratorium ends. That's regardless of any economic forces, and those landlords will have the right to evict. So if you pay your bills, they'll have the right to kick you out.
So
that's happening. So
this is where we need to categorize a multifamily unit when we're talking about these complexes of apartments. They're not under the retail mortgage-backed securities or anything like that. These are part of the commercial mortgage-backed securities. So that's what they're saying. The bubble is in the commercial section right now because 2008 happened to be the retail side.
Okay.
Well, they said, okay, well, we're not going to make that mistake again. We're going to go to the commercial side. And that is what everyone is saying now in the news, that the commercial side of this market, of the housing market and everything of the complexes is the place that is going to be the next bubble.
Wow. I could definitely see that for commercial for commercial backed securities, but I do think the residential will also be a big deal because single family homes are going up in price too. I think all of housing is going to face is in a bubble right now. I'm just interested to see when they evict all these people, if people are going to move in, right? And if they're going to raise rents to compensate for the revenue that they're still missing, right? Are they going to make it more expensive to live in those places and market it to people who can at that moment pay the bill? right? Not to say these people, can't pay, not to say anything about them, but people, if they raise their prices on an extra $1,000 of rent a month, I'm sure they will find somebody who wants to move in, especially if these are in big populated city areas, because people are moving out, but that doesn't mean people still want to live in the city. I'm, where I'm from in Jersey, they were gentrifying everything. They were building up everything to the moon. You know what I mean? Everyone lived near New York City, lived near Hoboken, lived near Jersey City. Those places became so expensive. 30 years ago, you couldn't pay someone. Now, arm and a leg, get 200 square feet of space.
Wherever a Starbucks, McDonald's, and Walmart start building, just get a house there really cheap. Hey, that area is gonna get gentrified quickly.
Yeah, but remember, that's the thing. That's like Silicon Valley. Menlo Park was just, a normal community. And then Silicon Valley comes and their houses went double, tripled in price. And all of a sudden people found that because their districts, right, the local municipalities can adjust taxes on those properties, they realized they couldn't pay for it. So like, you want to keep paying 3 times as much in tax? Well, that's what you need to do to stay here. If not, you have to leave. So sometimes that displaces communities, right? That displaces people if they can't afford the taxes. If your taxes stay consistent, and don't fluctuate with home value, which I don't really know where that does happen. I know in California they have a ridiculous problem with that, and fluctuating house value with fluctuating taxes. But that could push people out of those markets. Just like, you grew up here as your family, yeah, great, but we just built a nice new building over there, so your house is worth twice as much in taxes you can't pay. That sucks. Sorry, you're gonna have to leave that community, which does suck. But moving on up to housing stuff. And gentrification, man, the growth of tomorrow. But also student loan protection is going to end in September and October 2021. So all of you out there with your student loans, myself included, there's no sign that there's talks to forgiveness. September and October of 2021. I don't know the exact date, but it's one of those months coming
October. Up. Great, joy, yeah.
But there's talks that the Biden administration is going to cancel some debt. He's going to forgive some debt, forgive all debt, 10,000, 50,000. Don't put your eggs in that basket. Prepare yourself, prepare to pay that back, at least for a period of time. Maybe there will be some kind of loan forgiveness, but be prepared, because that is going to end, and I don't think they're going to be extended, because if we're talking about curtailing stimulus to stop inflation, you definitely need people to start paying back their debts, because when people don't pay back their debts, they have more money to spend, and when they spend erroneously, then they don't have money to pay back their debts, and that's just as bad as waiting is just as bad as paying it, as trying to minimize the shock. Now it's starting to pay now, so they're going to probably just have those debts start being repaid, and you're going to have bills start showing up at your door again. But also job openings hit 9.3 million record, so huge amount of jobs that are open, biggest since 2000. So that's a big deal, and the biggest surge obviously is in leisure and hospitality. It's up 33%. That was the biggest hit by COVID, so that makes sense. And quits are seen as a gauge of worker confidence that they can find new employment. They're up to all-time highs as well, up to about 2.7% of the entire activity in the labor market, which is generally seen as a good thing, because that means workers feel like they're flexible. They can leave one job and find another one pretty easily. So we'll have to see how that kind of plays out. That might be a good thing, because that might show there's liquidity in the labor market, but the economists still believe we won't be back to full employment in another year or so, because people aren't taking these new jobs as fast as they should be. People might have liquidity so they can feel like they can change jobs, which is great, but we need to get more people to be at work, period, because we have 9.3 million open jobs. So we want to fill those jobs in one way or the other. The layoffs are down. So.
They quit once they got that new stimulus bill, $1,400.
Maybe.
You take that check and you slap your boss with it and tell him I'll be back in 2 weeks.
I quit. Yeah. Back in 2 weeks when I'm done spending my stimulus and I needed a paycheck again. Yeah.
I am so sorry. But okay, great.
And that last one here is just the infrastructure bill, $1 trillion bill. 10 lawmakers, bipartisan, have come together and drafted up one that they say will not need tax increases to pay for, and be paid for $1 trillion over 5 to 8 years, but still needs to obviously go to the House and the Senate, and there's debates on what's going to be in the bill and how specifically it's going to be funded. So we're going to be talking about that, but they're moving forward on the infrastructure bill as a way to give stimulus without actually just giving money, but rebuilding bridges and stuff like that. So
all right, cool. There's a lot going to keep coming about post-COVID relief. We're barely just getting out of COVID, so are we going to be going into the next COVID stage? Are we recovering from COVID? We're still going to find out. So stick around, and we'll keep hammering at that post-COVID relief efforts.
Yeah, COVID mania.
Okay, topic number 4.
So topic number 4 is just some kind of quick data to point out is today was the U.S. China trade surplus, or from our perspective, deficit, right? Surplus for China, deficit for us, has grown, and that's because China bought about $13.11 billion worth of goods in May, which was down from about $14 billion in April. So they're buying less from us than we're buying from them at the moment, and Chinese imports from other countries rose at their fastest pace in 10 years to other countries. So they're basically importing from other nations faster than they're importing from the United States, and it seems that their imports from us have slowed about 41% from 52% in the prior month. So in terms of growth, there's definitely some activity there, and which makes sense if we're basically facing off against China in a tech battle. Trade may be affected by that. Also, the tariffs and the restrictions on certain types of trade are definitely kind of come down the line from the Trump administration, right? They want to kind of shrink that deficit on our end, right? Try to get us more of a surplus, but it doesn't seem to be working that well yet. Importers and exporters have been taking big hits, especially with all this inflation. And if we do have bigger trade wars with China, and as this becomes more material, as we really do stand off against each other versus tech, I imagine that we would, China may start to get things from other places as well, just like Russia's dropping U.S. dollar denominated, currency as well as oil contracts. So we're planning to, at least. So there's definitely this is the global macro kind of thing, and the strength of the U.S. dollar, which will affect most businesses, especially any companies that do things overseas, exporting and importing. So, in addition to that, the U.S. budget deficit grew $1.2 trillion in the first 8 months of the fiscal year, ending in May, which kind of makes sense, right? Because we spent about $4.7 trillion between October and May for the COVID relief. So no really big surprise there. I mean, the number looks really big, but deficit spending is a common political way of solving problems, but not solving them. So we have $30 trillion. Both Democrats and Republicans they don't do it, and then they just flood it in there. So that's really no big surprise. But the numbers are up, and the deficits are getting bigger, and that's the segment we're gonna have to talk about just in detail about what debt is and what's happening, because that is skyrocketing, and we are borrowing against our future selves ridiculously, and trying to stimulate today with money that we really don't have, and we're gonna have to pay back. So definitely some interesting thing there, just to kind of take stock of where we are at. Big deficits, definitely big deficits, but not necessarily like, oh, big guys, we spent a ton of money. So that kind of makes sense.
Interesting. What are some things to look forward to? So you mentioned that China has grown their surplus towards trading with other countries, right? Other, or more globally.
Well, no. So what the surplus is, like, basically when you trade with another country, right? Depending on how many goods are going from your country and going from their country, right? Imports and exports, there's a surplus and a deficit, and your goal is to try to keep it as even as possible, so trade benefits both countries unilaterally, right? Instead of having one country benefit more. We've always had a problem with trade deficits with China because we're an import nation, right? And as an import nation, we import more things than we export. We don't do as much manufacturing. We outsource manufacturing to China, right? And we import a lot of stuff that we buy, that's why everything says made in China in it. So it's made sense for a while. And the Trump administration was trying to kind of limit that, to kind of bring it back into parity there, bring it back into balance. But if we're having conflict with China one way or the other, they may be getting their goods from other places if they can find just as stable resources and supply chains. And it looks like they're moving imports from other countries at a faster pace than they have in the last 10 years. So, and there wasn't tons of information on this. So we're gonna have to kind of keep looking at it, right? But again, I don't think it's a huge impact right now. Trade, these things do fluctuate. We have to just kind of keep watching it. But just something interesting to know, from today. So
great. All right. Topic number 5.
Yeah, our final topic for today was the meme stocks. I imagine we'll be covering these almost every day, at least in one regard, if there's anything interesting that develops. There's a story about Mudrick Capital that got blown out of the market with AMC. They had a complex strategy of equities, bonds, and derivative products, mostly selling calls for them specifically. And what happened was the market kind of blew up on them, and the price of those calls they were selling went up ridiculously, so it kind of blew a hole in their strategy. So they lost about 10% over the course of like 2-3 days. The Reddit community was very mixed about that. Some people were like, oh, they weren't really trying to hurt us, but they shot themselves. And other people were like, they're shitty, fuck them. You know what I mean? So there's definitely a divide on that. But I think that's because a lot of hedge funds are being viewed as bad. But not all hedge funds, not all short positions are inherently bad. If you look at the amount of short interest on a lot of these stocks, you'll see they actually are very, very low. So they've stopped putting big short positions on these stocks. Any short positions that do exist might just be representative of the fact that they think the stock should be lower. And so not all of them are bad, right? I'm not gonna say that not all of them aren't, and people aren't trying to use naked shorts and trying to still pump the market down. But what we're seeing now is a lot less short interest on all these stocks. And one of the other things that are interesting is talking about how individuals, hedge funds might be trying to gas this trade. By that I mean they're buying lots of call options, and by doing so, forcing the broker dealers to effectively have to stay delta neutral and buy lots of shares to make they can pay out if these options are exercised. And by doing that, you kind of have the reverse of a short squeeze. You're forcing them to buy lots and lots of shares. So you're adding all this extra fuel to the fire. You're adding all this extra buying momentum, pushes prices up. And then when prices start to sell, traders have to release those positions to stay delta neutral, as well as clients just selling them straight to the market to take profit. So then you get these just gassing these big ups and then these big downs, which we talked about yesterday is like a 9-day trading cycle. So, which I find is interesting. That I thought, I was telling about how I think this trade might be getting hijacked and how people might be trying to capitalize on this, and how retail investors might get lost in the middle, getting just blown up and blown down. Taking those huge swells, and if they're not prepared for them, getting their boat swallowed up and everything, mast and all. So, I thought that was interesting today, and I thought that was just an interesting phenomena, right? Because I think the core premise of this trade makes sense. And I definitely think there's some fraud there. And definitely there's some very sketchy, inner workings for companies like Citadel and Halifax and repo markets and stuff like that. Definitely sketchy stuff. I think that the trade itself, as it is now, is it's evolving in a different way. And I think it's evolving into a mainstream overcrowded trade where people are finding ways to apply leverage to this to make big, easy money. And my fear is, of course, retail investors. I don't give a shit about hedge funds. I don't give a shit about the big banks. You know what I mean? They take that big risk. They get blown out. Good for them. I don't give a shit. But the retail investor I do care about, because a lot of retail investors don't think about the downside. They don't think about the risk, and they just throw their money in there. And if the markets are being pumped like this, you have to time it right. You have to play it. Otherwise, if you time it wrong and you're buying it at a peak, you're gonna get blown up. You can disappear.
Well, let's talk about something coming up. So just today, which is June 11th. The stock went down 5%, finished off at above a plus 5.88%, and aftermarkets is up 1.61%. So it went to a low of 208, finishing at a high today, even after hours, at 237. What's coming up right now is the reconstitution of the Russell Index. So they're looking at the Russell 2000 having GameStop and AMC move over from the Russell 2000 to the Russell 1000. Now, when that would occur would be this reconstitution is they're supposed to be coming out with news on these reconstitutions and who's going to be moving over on June 4th, 11th, 18th, and the 25th. And on the 25th is when the reconstitution occurs, and that's going to be in June. So every Friday of this month, we should be getting news from the Russell Index of who's going to be moving around. And what is the benchmark for being able to move from the Russell 2000 to the Russell 1000? Well, Yahoo tells us, and it's $7.3 billion market cap. That's what they need. GameStop at this moment, per Google Finance, its market cap is at $16.76 billion market cap. So what happened with Tesla? When Tesla was going to be put into the S&P 500, Tesla got hiked up. What's going to happen with the Russell 2000 of GME, AMC moving over to the Russell 1000? Well, guess what? Those shares need to be brought back into the market. So those shares need to be shored up at that time, and then those shares get to be moved over to that new index. So that's going to be interesting. And when that occurs, I'm expecting a hike up. So, by the way, not financial advice.
Yeah. Never financial advice, but opinions and perspectives. But interesting.
I mean, Russell, 2000, Russell 1000. I don't even know a guy named Russell. So I mean, all this information is kind of new indicators for us to, I guess, get more behind. Aside from like, oh, you know what? Like we got Reddit guys going on there, and Wall Street bets, and these are guys pumping it. No, there's real numbers, real, I guess market plays being made in the background that are truly affecting the stock, aside from just what some of these Redditors are kind of pumping.
Right. I think that when you see a lot of these bigger mints, I don't think it's just the Redditors. You know what I mean? Like I think it started out that way, but I think the Redditors are part of this. But I think more leverage is coming into the market by bigger players. So, just because you see big swells doesn't mean because the Redditors, remember, they want to hold forever. So when you see these big patterns of up and down, that's not the mantra of the Reddit traders. The Reddit traders are hodl, right? Hold for dear life, which was turns out a fun fact that was actually a misprint in a text message that I forget somebody had made, and then they just kept it, and then they called it hold on for dear life. But that's the thing. Like if it keeps pumping and dumping, that's not the Reddit mantra. So there must be other forces at play, and I definitely just be careful if you're gonna invest in that. Just be careful. Just keep your head on your shoulders.
I was reading it, and I'm pretty sure it was involving like AMC and GameStop, but apparently the percentage of, let's say, retail investors that are looking at Reddit and all these forums, it was, I think, at a very low percentage. I think it was like 3% that's actually like in that market and has the possibility of affecting it. So as we're seeing these climbs, 3% isn't going to affect that market enough to make it climb, right? It's the other big players that are in there that we have to say, like, hey, this isn't society like holding together and we're going to stick it to the big institutions. Well, no, I mean, the big institutions are still playing in the same game. If anything, I'm pretty sure there's a bunch of smart guys trying to figure out how are we going to get either our money back, how are we going to keep your money that you decided to put in the market, and at the end of the day, how are we going to pretty much make it so that you guys kind of learn your lesson, get scared of the stock market. I feel, and I say that last part because the stock market has always been a rich man's game. The lower class, middle class, they've never, ever had this great of an opportunity or wealth of knowledge or, information in order. Accessibility is going to be huge. Yeah, to participate in the stock market. So we're having a lot of new investors coming in who they've never touched this market ever before. And I feel if there's going to be a scare tactic to keep, the poor, it's going to be to kind of let this one burn and teach them a lesson and playing with the big boys.
Well, let me tell you this. They probably have one guy who's probably a guy that they're just like, hey, you're an intern? Yeah, dude, just be on this Reddit chain and just tell us whatever they're doing. And they're probably paying that guy like $40K and he's not even sleeping for like 3 days straight.
Right.
But he's telling them, he's the little snitch in the background, telling the big guys, dude, this is the next stock that's going to get pumped. And that's why it's probably pumping like CLOVS or CLVS, like Clover and all these other Wendy's and everything else. So there's always that one guy. Don't be that guy.
The important thing to note is that, Reddit is an open channel. You know what I mean? It's not like it's a proprietary trading strategy held in behind closed doors. Anyone can watch the Reddit channels, right? Anyone can watch these feeds. Anyone can watch Wall Street Bets and go and see what people are talking about, what their plans are. And sometimes they announce it at those segments, like, what are your trades for Monday? What are your trades for Tuesday? So, if you're a hedge fund, and you want to make smart money, maybe you do think that big short positions will make you money because the stock's overvalued. But right now it's not the time for that. So what do? You go the other side, all right? You play along. You use the Redditors as signals, right? As well as other people using it as signals. You find stocks that are heavily spoken about, that they have plans for, then you go ahead and get in that trade early before they run it up. Then you get in early, you make the profit when it rises. Then you sell it at the top because you cash out. So I definitely think, they're getting smarter, because why not? If you're a hedge fund with all these resources and you're seeing this persistent trade and this open source signaling, why not? That's what, so I definitely agree. I definitely think they have people that are just like, watch Reddit all day, tell us what they're doing, and we will try to figure out how to put money into this. So I can definitely see that being possible. Yeah.
Okay. Any follow-ups to these meme stocks? I do have one more piece of information to follow up this topic.
Sure, go for it.
All right, so this one's going to be for the clickbait. So we all know Jake Paul, right?
Yeah.
All right, so this is going to be topic number 6. Topic number 6 is going to go into cryptos, NFTs, and kind of how the big news that came about. Was it today, this morning? Let me see. So currently, there's a lot of metaverses coming out, and essentially everyone's trying to take dominance over the market on who's going to have the most users, what's going to be the most compatible, maybe transactions are easier, faster, and the biggest one right now currently is the value of NFTs. And so NFT technology is what's driving the metaverse. And so recently, what I just read today or yesterday is that Jake Paul signed a deal with one of these metaverses. Now, this is huge because this guy's been making, waves upon waves in social media. So kind of the word that my cousin always says is like, you can't really sleep on this guy. Like, he's going to keep coming out with more and more, and with his ear to social media, he's going to be using the latest tech. And so this latest one is that they made a virtual NFT of himself in boxing gear, and I believe what it's going to be is going to be potentially the recording of him boxing as an animated NFT to then be sold later on. Now, that's just a guess, but essentially...
when he fought Mayweather, you mean?
So that was actually his older brother, Logan Paul. This is
right, yeah.
This is the younger brother.
Yeah.
The younger brother, he's been making a name by challenging some of these UFC fighters. The last one was, shoot. You know what? It's so sad that I forgot his name, but he got knocked out, so it doesn't really matter. And so the biggest thing is that in this world, everybody's using their own type of cryptocurrency in order to fund these worlds. If this is going to be a world that's going to be popping up, and this isn't financial advice, this is financial advice. I'm just kidding. This is not financial advice. I would say I would look into the type of cryptocurrency that this metaverse is going to be using and built upon, and I would invest in that one. That's probably going to be the next thing I might do. The last one that I found was Mana, which was from Decentraland. That was a really, really interesting one. I got turned on to that one when it was like 8 cents, 10 cents. Started looking into it. I was just like, hey, why don't I buy land for fun? I slept on that thought for too long, and a month goes by and it's up to 50 cents. And I'm like, it's going to drop again. It's up to 75 cents. It's going to drop again. Currently, it's sitting above $1. And I'm smacking myself because, you can only think about the returns. Like, literally, I put $20 in, and then I looked again just because I was like, let me play around with it. I look again, and I'm touching $200. I'm like, right. Is that really the return I just made right there?
It's called FOMO. Fear of missing out. Every time you make a miscalculation and don't get into a trade or see other people making money on a trade, you look back and hindsight is 2020. You're like, oh shit, that thing was, Bitcoin was worth pennies on the dollar. They were used to give away Bitcoins for free at rallies and stuff, and there's little gifts because they were like a trinket nothing, and now there's worth $5,000 to $7,000 of Bitcoin. So but the key is not like if you didn't buy in early, the key every time you get it wrong, don't rush in and buy just because you don't want to miss out because you thought, I missed out then, so I don't want to miss out now because chances are you buy at a peak. But then again, with cryptocurrency, I don't know. The typical valuation doesn't really work with cryptocurrency.
So this is
so many of them as well.
Yeah, so this is where like the hype comes from social media. A lot of these cryptocurrencies, especially NFT-backed cryptocurrencies, they're only coming from social media. They're talking, people talk about it, people advertise it, people market it, and the value is based off of the person who's mentioning it. So I see this one increasing in value over time. It's definitely going to be an interesting one. I believe the name of it, let me see, is called Wilder World. And so I see that as one to check out.
It's going to be interesting because I've just read right now that Logan Paul created its own NFT and made 3,000 copies to sell at 1 Ethereum each, which was at $2,000 at the time. And within 30 minutes, he made $1 million.
Wait. How did he make 3,000 NFT of the same thing?
Let me tell you how NFTs work. Essentially, you're able to create any number of unique tokens that are deemed, and you as a creator are able to say like, okay, the rarity of this is 1 in 5, 1 in 1, for some of these that, let's say, the NFL or baseball cards or things like that, who are jumping into NFTs. They're literally making just like thousands of them so that you could purchase them, and then that's why also like.
So I have one of the
Scarcity.
3,000 possible NFTs.
Yeah, scarcity sells. So if you say there's only 100 copies of these, they're gonna be like, well, the value's gonna go up if there's only 100.
Hey, if you wanna buy an NFT to have ownership of something,
It's a new
go right ahead.
art. It's the new art that's the new kid on the
People
blog.
compared
and
NFTs to
everyone's
like
gonna
trading
try it.
cards. Like, you know what I mean? Like baseball cards, you know what I mean? Like, it's only valuable to the collectors. So if you have an NFT of something, it's like, what's the purpose of owning a baseball card? Really isn't any besides you like it. So what's the point of owning an NFT? Because you like it, because you want that ownership of the original thing or a piece of the original thing, right? So again, it's completely valid. There are markets for these. People willing to pay for it. You know, go crazy. I don't think I'll ever buy an NFT. But at the same time,
Mark the word. We're gonna make a clip out of that. We're gonna make a new YouTube video where Wyatt buys his first NFT and he swallows his words. Okay.
so
It's
I guess
because
you'll
he's gonna
have
get
like my
into
dead
VR.
body with strings, and you're like my finger like.
Once Neuralink comes out and Wyatt's just like, okay, I need new stuff for my virtual environment, he's gonna be like, do I buy that first NFT?
I don't even
Oh my
I
gosh.
don't even have social media. You think I would waste any amount of money on NFT?
What?
You want to know
What?
what? Because
Let
if I
me
spend the
tell
money on
you
the
this.
NFT and the power goes out, my NFT is gone.
What?
If
You play Minecraft. If there's an opportunity for you to make a virtual world, I best be knowing that out of the three of us, you would be the first one on there.
okay, I have the T launcher. It is free. I don't pay for Minecraft, so I'm not gonna pay for I'm not gonna put a paid thing in my free world. I'll just build it in Minecraft. Let me tell you what. If it's just a tiny little itty piece here. I have my feeling is the growing dependency on technology is extremely dangerous for humankind, and the increased digitization of our money and assets and wealth and everything that we love, and the connecting of all those things onto the same networks at the same time while we're not securing the security for it, and we're not really focusing on fixing the problems we face now. Like, technology is evolving. We're talking about crypto digital currencies, but we still have tons of homeless people and entire countries and continents where people are starving to death. So, and forget about everyone outside their own country. If we just look inside the country, the number of problems that we have that we're not fixing, but then we're creating potential new problems with evolution in these technologies, to me is like, so you're going to make a society like a dystopia where, you know, only the select few people are actually able to live in it, and the rest of us are all going to have to figure out how to solve our problems on the other side. Not to mention, if all the things you have are digital and then the power goes out, there's a reason why your bug out bags, you know, in movies, and you may own one yourself, right, don't have, you know, weapons and food and a Bitcoin wallet in it. Because when you need money, you use fiat currency and cash, something you can hold in your hand, right? Those assets are tangible, right? If everything's digitized, then technically there's no limit what can be taken, manipulated, or shut down. So that's my personal
So
belief
I will
that
sell you 1 million Bolivian dollars for 1 million of your US dollars.
that doesn't make any sense because that exchange rate is definitely incorrect. It's not a 1-to-1 exchange rate.
Yeah, but I mean,
Well,
it
that's
is a
hard to do.
fiat and it is cash and it is something in hand.
But there is an exchange rate.
I
So
don't-
I obviously would prefer to have certain fiat currencies over other fiat currencies because of how strong it is relative to the exchange rates in the market. But the thing, 'cause this is the thing though, even if it's a fiat currency, it's still physical paper. But in my country, like, the US dollar is accepted in most countries. It's accepted and seen as a store of value that most people can convert to. But but it's still a fiat currency, still a piece of paper I can hold. Cryptocurrency, no matter which one you own, if it's digitally stored, you can have the device. I can store it and save it on a wallet that's on my phone and have my phone with me at all times. But if my phone dies, I cannot gain access. I can be $1 billion of Bitcoin on here, but if my phone is dead, I can't access it. If my phone is broken and inaccessible, it's gone. There's a story of a gentleman.
Seed
100
phrase.
He had a bunch of Bitcoin and cryptocurrency on a hard drive. And he threw his computer out. Turns out that when he calculated it back after Bitcoin's run up, he had about, I don't know, like $250 million worth. So he went into the town. He said, "Listen, it's in the dump. I don't know where it is, but it's there. If you me flip the dump, I'm gonna tear it apart and find it. I will give the municipality 50% of the Bitcoin for free." if you let me find it. They said no. They said it would spew toxic chemicals into the air and it would be dangerous to the community. So you just lost $250 million. No bank is going to insure that. Not to mention
So,
cryptocurrency. No
I
bank
just-
insures it. You can't build it. If they can't produce it, how do they insure it?
So I just heard you say there's $250 million worth on a
In a dump
property
somewhere.
currently right now.
That's
That's as good as buying a field with a treasure lost in it.
You know what? You're right. And
And
while
it's a
you're
dump.
sifting through all of the garbage, Josh, you know, Josh, look, I'll find exactly where it is, and we'll do a whole segment. Josh,
They know
hunts
where
for
it is. They know what
250 million of
section.
Bitcoin.
And
No, they don't know
one
where in
has
the dump it
tried.
is. They just
Yeah.
know it's in.
No, they said they
So they
have
have
it
to-
organized so that the way and where they dump these products, they know it's like the range, like the area, but like the depth and the level and
That's even easier. We will have a whole segment where Josh goes to the dump and fishes for this hard drive. Which, by the way, there's no way you know that hard drive has a Bitcoin wallet on it, and also there's no way you know the password of the Bitcoin wallet. Because there's another story of a gentleman who had $100 million of crypto and he couldn't remember his password. He had 5 attempts and he had 4 and he had 1 left and he sat there. They did an interview and like, how do you feel? He's like, yeah, I'm not that worried. I'm like, yeah, you know,
Yeah,
I would
you
be
are.
kind of worried.
Yeah,
It
you
means
are.
that you have 1 try left to, and if you don't, it's going to delete everything on the hard drive. Because remember, it's just data. You're not burning it. You just scrape the data. Oh, Bitcoin's gone.
yeah. Okay, well, I think that wraps up our episode. That was we hit on a lot of good topics. We will be back on Sunday to more thoroughly go through any and all topics.
We're gonna cover topics, do the ones we did, and then new topics. We have a list of topics every day that when we take out the top 5, but we don't cover other ones that are in there, and we'll just have our general conversation. So
Right.
we'll do that for a little while on Sundays.
So yeah,
All
yeah, gentlemen, it was a pleasure. Another Random Rabbit episode. Podcast number
Podcast.
3. Hello.
Hooray.
We're getting up there, and to our one viewer, what's up? That might just be Wyatt, but what's up?
Hey, thanks. Yeah, happy to be here. Love the podcast. I've had it on pause this whole time, but I can just tell by the way you guys look very professional. Everything I own.
Some way, somehow, that was the
Donation.
one thing that started to make it like. So okay,
Well, they don't like that.
they didn't
YouTube
like
knows
it. They did
we're
not
trying
like
to,
that
We're
at
trying to
all.
create a cycle
They don't
of giving to ourselves. They don't like that.
And they're listening.
Yeah, dude. Honestly,
Get out of here,
I bet.
Amazon.
They have the Google little pods over here. They have a little switch. It's like you click it off and it says the microphone is off, and I'm like, yeah, I believe you.
Yeah,
sure.
You have to tell me the
Oh,
mic's off.
Oh, the mic is off. Don't worry,
it's
I'm not
like,
listening.
Oh,
You know the
thank
funny
you.
thing-
It's like, oh, no problem. Wait, what?
But here's the funny thing: if you talk to it, it's something that's like the microphone is off. Please turn it back on.
How do you
I'm
know I'm
like,
talking to you?
well, so the microphone is working. Oh, you wait. You're just telling me you're not connected to the internet. Well, I have no way of telling that anyway. So I guess I'll just believe you.
Well, screw me. Okay.
Yeah. Well.
Well, gentlemen, it was a pleasure. We're gonna go at that again. Yo.
This is the other thing we have to do. By the way,
Yo.
so when we because we're here now, when we talk about consolidating this into its time slot, we will definitely need to figure out a way to quickly end the segment. So after we're done with the last bit, just have like a 1 or 2 liner, and I'll think about that this weekend. I have something that we can add so that way we can trim these to beginning and end much faster. So even when it's on live, it's still tight. So we have less to crop out because we definitely do spend a lot of time just saying like this was great.
Yeah.
I love you all.
Yeah,
so-
we're still alive, right?
Yeah, we're still live right now, which is fine. But what I might do is I might just be cutting all these up. I took track of all the time, and so it's gonna be
Right.
like the more I do this, the more I just find those repeated patterns.
Oh yeah, no, definitely. And I think we're getting better at hitting. Were those all 5 minutes roughly for our topics? By the way, are we still
Yeah.
doing well? With...
I mean, we were definitely over on a lot of topics, but
But
we're
that's the thing. If the topic's big enough. You know. We can...
yeah, no, there's such like hot, heavy topics, hot and heavy, and that like
Yeah.
there's no way you
Gosh,
can
I
just do a
love listening
quickie.
to you talk, man. Tell
Oh,
me
yeah.
more about NFTs.
Tell me more. All right, guys, I gotta go. I'll see you later. Jeremy signing.
Bye.
Laters.
Bye, everybody. See you on Sunday. We still live? Right, but they can't hear us. So, yeah. So, yeah. So I'll log in and I'll fix up some titles and stuff. We just have to, I guess one day, because we have topics in there that we didn't talk about, so we can kind of talk about the topics that we didn't cover, which will be the ambiguous ones. We can do a run up of these things if we want, and then we can just talk about